right. Hello, everybody. Good morning. We've got a couple people that are still logging in, so I'm going to wait just a minute here. In the meantime, why don't we cover some logistical issues? We have enabled the ability for you all to go ahead and type in your questions in the Q&A box. And what we're going to do is we've also enabled a voting function so that if there's questions that you see in the Q&A box, you can go ahead and vote for them. We are going to try to get through as many as we can at the end of this presentation, but we'll prioritize those that are of most interest to you all. We also wanted to let you know that this meeting is being recorded, and we're going to post it on our PPP webpage of the American Riviera Bank.com site. So if you are unable to listen to the whole thing, or there's something that you want clarification on, you can go ahead and refer back to that presentation on our webpage. If there are questions that we cannot address during the time that we've allocated for this webinar, please know that we will have those questions addressed as FAQs. We do have a PPP webpage on our site. And on that site, we have all the commonly asked questions that we've had from customers, as well as things that we think are really important for you all to know. So we continue to keep that updated, and we will update that even more after today's webinar. One more thing to note, this presentation was prepared as of yesterday with the very most recent information that we had access to. And lo and behold, as is the way of the SBA these days, they went ahead and issued the latest, I think it's number 16 interim final rule last night. And that interim final rule was accompanied by the new loan forgiveness application form that we've all been waiting for. So we've taken a real quick preliminary view of that application, and it does not appear as though anything that we're going to talk about today is changed by that. It just reaffirms our assumptions and some of the things that we've all been contemplating here. So welcome. Feel free, like I said, to key in with your questions, and we'll go ahead and get started. One last little caveat here. The views here that I am speaking to are mine alone and not necessarily those of my employer. We have tried to footnote and link and talk about specific regulatory and legal citations so you can understand where we're getting this information from. But this is not intended to be legal advice. And we do encourage you to speak with your legal professionals or your CPAs because each one of you has a very unique situation, and you're going to want to get some professional expertise in interpreting how the rules might impact you in your business. So just a little caveat there. That said, you know, we pride ourselves at ARB in providing you with expertise and financial information to help you with your business. So if there's anything that we can do to help you through this process, please do let us know. It's interesting to note, I thought we would start off today with the status of the PPP program and where we are now. Community banks continue to lead the effort on the loans that are being processed. You can see on this slide here, and this was as of the 6th, the SBA updates these figures weekly. But as of the 6th, that count is predominantly the banks with 10 billion or less in assets. So those are the ones that are really out there serving the customers. The reason I bring that up today is twofold. Number one, you can see the net dollars that have been funded through the program thus far, which means we have about 100 million or so remaining for customers that have not yet received a PPP loan. Those of you on the phone likely all have yours, or you wouldn't be interested in how to get forgiven, but just wanted to bring that up. The other reason that I bring that up is the community banking network has really been active in trying to support customers to get them through the application process and get these loans processed for you and in your bank accounts as quickly as possible. And that's just the way of community banking. Some of the points we're going to talk about today are going to make it very clear why it's important that you have a really good relationship with your bank in applying for forgiveness. There are some timing requirements. If the banks don't respond to the SBA in time, it could impact your ability to get forgiven. You don't need to worry about that with us. We are about to launch our online portal, which is going to be look and feel very similar to what you use to apply for the loans. We'll be launching that. We'll be sending each one of you individual personalized links to apply for your forgiveness. And in doing so, you will also be assigned to an officer of the bank to guide you through the process the whole way. So I know there's been a lot of changes. Just one thing to keep in mind, while you might have all seen that the president signed into law last Friday an extension of the covered period from 8 weeks to 24 weeks, we are going to talk a little bit about some of the issues that might come into play if you do elect the 24 weeks as opposed to the original 8. So again, we tried to go through all the last 4 or 5 interim final rules and pull out what we really think are the aha moments. We're not going to go and deep dive into all the guidance and all the requirements. But again, if there are specific questions that we can address for you, we can do that offline or through our FAQs. As I mentioned, this is as of the 6th. The funding remaining was about $130 billion. And now we're looking at probably closer to 100. But as you can see, it's taking a lot longer to deplete these funds than we did in round 1, which went in less than 2 weeks. It was a fast and furious couple of weeks for us. I'm sure we spoke with a lot of you on the phone and via email, and we just so appreciate your patronage and your patience with us, because this has really been a Herculean effort. I'm sure you've all heard lots of banks around are talking about the impact of this loan program on their banks, and the fact that the majority of our community banks are funding more loans in about a 30-day period than they typically do in 2.5 or 3 years. So we're really excited to have been able to provide the service to you. I did want to clarify that the SBA issued a statement on Monday reaffirming that the very last day to be approved for a PPP loan is June the 30th. So it does not appear as though at this point they're planning on extending the program. That said, they reissued the final interim guidance last night with the new forgiveness application, again reaffirming that June 30 is the expiration date to be approved for a PPP loan. I do want to caution too that rules continue to change, both for new applications that we take, as well as those of you that have existing PPP loans. So it's really important. Don't spend a lot of time listening to the media. Make sure you get your facts straight. Make sure you're using professional advisors to help you with this, because it all is very, very complicated. I see some great questions coming in through already. It looks to me like we are going to address most of those through the course of this presentation. So I do see also people voting on the questions, so that's great. So please let us know if you're interested, but I'm thinking that we might cover them all. We're going to start today with a brief update on the latest changes. We're going to talk to you a little bit about the key factors that might affect full forgiveness of your loans, the importance of maintaining your records, and then the new requirement that the SBA issued, I think it was May 22nd. They did an interim final rule on loan review, and they clarified some things about the size of the loans that they potentially could review throughout the process. The reason we bring that up is we want you to be aware if we do ask for documentation, or we do have additional requirements beyond maybe what you hear colleagues are getting at other banks, just know it's to really keep you safe. And we'll explain to you by the end of the presentation why that is and why it's really important to maintain the records that we're going to talk about. One of the key provisions is of this particular interim final rule was that the SBA is requiring that you all keep records for 6 years. So they're just letting you know that it could come about at a later date, regardless of when you get approved for your loan forgiveness. Okay. As I mentioned, the world has been fast and furiously changing in the SBA land. These are just 5 of the interim final rules out of the 16 that we've seen thus far. And as I mentioned, it does not include the one that came out last night. But we all know that the CARES Act was signed into law on April the 2nd. It was a Thursday night. We spent all the next day, Friday, scrambling to get the applications ready to send out to you electronically. There were some initial hiccups that first night, but we didn't want to delay getting the application out to you. And I think within 24 hours, we had close to 500 applications. And again, we can't thank you enough for your patience and for supporting us through all of this. It was really important to us that we make these funds available to our customers, and we're really glad to have been along this ride with you. At that time, the big requirement that everybody was talking about was this is truly a paycheck protection loan. It is intended to effectively supplement or, kind of replace unemployment, because the unemployment offices were being just overrun. They wanted a different way to get money into the hands of the workers. So this was really intended to provide payroll to workers, not as a disaster loan. There's another loan product that you may have heard of, and some of you may have gotten called the EIDL. It's the Economic Injury Disaster Loan. That's something that you apply directly through the SBA for, and this paycheck protection loan was something that you applied direct to your bank. Not all banks offered it. I think the last count I saw, there were over 5,000 banks that were offering PPP, but in the first round, I think it was only 1,500. So a lot of people were a little bit late to the game to offer the program because they hadn't previously been an SBA lender. And we, as a preferred SBA lender, were able to launch on day one. So that's great, and we're really happy to be able to support you in all this. So that was a fast and furious couple of weeks. Y'all know the money ran out pretty quickly. I think the next appropriation of funds was released on the 27th. It was another wild ride. We logged in at 3 a.m. being on the West Coast here to make sure that we had access to the funds as soon as we could. They ended up not really releasing it till 10:30 in the morning, our time. So that worked out well for us, but they did open early. I'm sorry, 10:30 in the morning, East Coast time. It worked out well for us because they did launch a little early to get the applications in. So we were able, I think, on that first day to get about 130 of you through, which the reason I bring that up is because it also means that there's a lot of you that may be applying for forgiveness at the same time. Now, the SBA released this loan forgiveness application on May the 15th with really no rules or guidance to supplement other than 11 pages of instructions about how to fill in all the fields on the form. And it also introduced some new requirements that created a great stir in the industry. And there are a lot of industry advocates that have been proponents for a much shorter application, not so many requirements on you, the borrower, and online calculating tools that help you determine the forgiveness amount. Regardless of any of that, I want you all to be rest assured that we are going to be using, as I mentioned, an online portal to assist you with the process. You're not going to be having to fill out the form without guidance along the way. We're going to provide for you downloadable Excel workbooks. You're just going to key in data. It'll automatically populate, just kind of like you saw during the loan application process. And it'll be available for e-sign. The difference this time around, there was a lot of folks that had to change their application throughout the process because new guidance was coming out and things were happening. And we had already had e-signed applications from you all. Well, in this case, we're going to be able to work with you on your forgiveness application, and we'll send it to you for e-signature after everything is all complete. So you'll be rocking and ready to go by the time we send you to the SBA. On the 22nd, they then finally issued, I don't know what it is about the SBA, but it tends to be a Friday night issuance. That's what I spend my weekends doing lately is, glass of wine and reading through interim final rules. It's the way to have a weekend, let me tell you. But they issued two on the 22nd. And the first was their interim final rule on loan forgiveness. Really not a whole lot new here. They basically brought forward the requirements for documentation to support your costs. And they pulled it forward from the original CARES Act. There are a couple interesting things that we're going to talk about as we go through the documentation requirements. So I'm not going to belabor them here. The SBA then also issued their loan review interim final rule, and this is where things got a little interesting. Mainly them saying that despite what you may have heard, that they were only going to audit potentially those loans over $2 million, this clarified that that was really only for the need, the economic need for these loans, right? You had to sign a certification as part of the process that COVID was requiring the need for this loan because your operations had been impacted. And there was a presumption of compliance for that if you were less than $2 million loan amount, because you wouldn't likely have access to other funds. This clarified that there are other reasons, though, that the SBA might choose to pick your loan for review, and we're going to go over that and cover that in just a bit. June 5th, finally, they signed into law something that had been talked about for months. Not a minute too soon, for sure, because we're already starting to see people getting through their 8-week period to spend the funds. And the PPP Flexibility Act was signed into law on June the 5th. What this did, and this is one of the questions that I'm seeing, it extended the covered period from 8 weeks to 24 weeks. So we're going to talk about that in a little bit, and hopefully I'm going to be able to answer the questions that you've all posed thus far. All right. So what happened on June the 5th? Well, it changes the forgiveness formula all over again. So everything we've been coaching you on has changed, and it's changed to the benefit of a lot of businesses. So we did want you to be aware that there are some significant changes that could be helpful. The first is it dropped the threshold for having to spend your loan on payroll expenses from 75% to 60% or more. The other thing they did is they clarified it's not 60% or more of the loan amount, it's 60% or more of the loan forgiveness amount. So let's say you can't spend 60% on payroll. What this says is just don't spend the full loan balance, because that balance will become due. It won't be forgiven. But it clarifies that you can still get partial forgiveness if you've spent a portion of the original loan balance on payroll, provided that the majority of those funds, or 60% or more, are for payroll expense. Clear as mud, right? It also extended the covered period for using those proceeds from 8 weeks to 24 weeks. However, I do want to caution that borrowers may still elect to continue using that original 8-week period, which, for those of you that have already spent the money on payroll and are doing all the right things, we highly encourage you to apply now. And that way you're not subject to the ongoing changes to the rules and the ongoing compliance obligations. Though that we're going to cover a little case study in a minute that shows you the different timelines under each of these different scenarios, so you can get a feel for how long it might take your loan to get forgiven if you opt for 24 weeks. Effectively, what you're going to need to do is you're going to need to wait till 12/31 to give them your FTE count, and then you can apply for forgiveness. So you either look at the June 30 period for rehiring staff, or you look at the 12/31 period for rehiring staff. If you're going to use June 30, you can start applying for the loan as soon as you've restored staff. You don't have to wait till June 30 to apply for forgiveness if you've already been able to restore to your pre-pandemic levels. And we're going to discuss that in a little more detail in just a minute. The other thing that it did is it created this exemption to the requirement for restoring your FTE or your wages or your salaries, but it changed things a little bit. In the original rules, it said that if you were unable to rehire individuals who were employees because they'd been fired or because they had declined your offer to rehire, that it would be exempt from reducing your forgiveness amount, provided you documented each one of these decisions for the employee not to come back. But the new rule added an and. So now it's not enough that you prove that you couldn't rehire those individuals. You also have to hire similarly qualified employees on or before 12/31. Again, if you're going to go with that option of extending the period, it becomes 12/31, and you'll have till the end of the year to hire similarly qualified employees. Now, one other caveat, which we'll talk about in a little bit, remember, the reason I bring this up twice is because it's important. If you're unable to hire employees because they say that they're collecting unemployment, they don't want to come back, you have an obligation now to notify the local unemployment office of that employee's decision not to come back within 30 days of that. If you do not do that and do not document that scenario, then it could impact your ability to leverage this exemption. So please be aware of that as a potential issue. The other thing that the extent or the Flexibility Act did is it gave you a whole new exemption. So let's say you are a phase 3 business and you're a business that cannot reopen your facility as of yet. Obviously, June 30 is not going to work for you, but you don't even know that necessarily 24 weeks is necessarily going to work for you. But you're able to reopen, you're able to spend money on payroll, but you cannot return to your pre-pandemic levels of business activity because you're complying with the federal requirements or guidance that relate to these social distancing, sanitation, or worker or customer safety requirements. So again, there could be a lot of things that come into play here, and we do expect additional guidance to be issued by the SBA. If not, in an interim final rule like came out last night, they've been doing frequently asked questions, FAQs, that they update on a regular basis, and they also issue notices on their site. If you have not signed up for our newsletter and or are not following our blog on our website, I highly encourage you to do so. We've been trying to post any relevant information as it changes with the SBA to keep you all aware of what's going on. And in those blog posts, we give you links to all kinds of sources so you can do your own homework. Okay, so the loan forgiveness application, again, this was yesterday. This is what it used to look like. The reason I bring that up is because you see that line 10, payroll cost 75% requirement. Obviously that's changing to 60%. So that's going to be a little different for us. This is not the whole application. As I mentioned, the whole application is 11 pages long and includes all kinds of details and appendices and worksheets and all kinds of things. And that all still exists. But as I mentioned, we're providing an online tool for you. And what you'll do is you'll download an Excel spreadsheet. I'm going to show you a little bit how that works in a minute. And that can be used to populate the form. It's really important that you use the documents that we provide to you and don't try to give us a handwritten copy of the application. We will not be accepting handwritten copies of the application, and that's really for your own safety. As we go through some of the tools that we're going to be offering, you'll see why it's important. If you use the tools we give you, it'll give you your very best chance of being submitted to the SBA. They are requiring electronic submission of the forgiveness application, and it'll also show you how you can go and upload supporting documentation in the event that you're one of the lucky few that gets selected for a loan review. We're also, as I mentioned, as part of this process, you'll all be receiving your own customized link that's specific to your application, and your supporting documents can be uploaded directly within the tool, and it will be right next to each one of these expenses that you see. So it will be really easy to follow, and at the end of it all, you'll have a great little application that we'll send to you for e-signature, and then you'll be on your way to the SBA. Again, really important. The quicker we can respond to the SBA on their questions, the better chance that you have of getting forgiveness. So we'll go through that here. So how do we maximize loan forgiveness? That's one of the common questions that we continue to get. First of all, and we've heard all kinds of things, ensure that loan is only spent on eligible expenses. We've heard people, oh, I want to go buy a computer, or I want to go use it to buy PPE equipment. It's hard for me to say PPE because I've been saying PPP for so long, but the protective equipment that you might need in your businesses. Do not find another way to purchase those items. Do not use your loan for those expenses because they are not eligible. And if they are not eligible, you're going to impact your forgiveness for the loan. Documentation. You've got to have documentation to support your expenses. Now the SBA has certain documents that they're going to have us submit along with your application. And then there's documents that they're going to have the bank evaluate, but not necessarily submit. And then there's documents that, while they do not need to be submitted to the SBA, need to be kept on file for up to 6 years to evidence what you say in the application. And the very last thing that didn't seem to get enough press about forgiveness in the beginning of all of this was the fact that you do have to maintain your FTE. You have to maintain your staffing levels at pre-pandemic levels in order to get full loan forgiveness. Otherwise, there's something called an FTE quotient that will reduce your loan forgiveness in an amount that's proportionate to the staffing that you lost. So we'll talk about that in better detail in just a bit. But they're also going to be looking at your salary reductions. If you've had any salary reductions from more than 25% for any individual one employee, that could impact your forgiveness as well. Okay, so as I mentioned, payroll expenses, the definition really hasn't changed from the original CARES Act. It's any compensation, and it can be salaries, wages, commissions, tips. Again, you don't want to be going and adding tips that are already reported on your 941. You want to make sure you're not double dipping anything, because the records will be checked to verify the amount. So be very careful. You also get vacation, parental, family, medical, or sick leave that's employer paid. Okay, so that's what you're providing for your staff. Remember that you cannot double count any of these. So if you are giving somebody leave under the Families First Coronavirus Response Act, let's say somebody is diagnosed with COVID, or they're being tested for COVID, or they're on a family leave because of school closures, that money that you're paying them under the FFCRA cannot be included in this forgivable amount. It also includes allowances for separation or dismissal. So if you're giving somebody a package or something like that, then that counts as well. They issued the guidance on the 22nd that also said if you were doing an extra little bump for hazard pay, or maybe you were giving an employee a bonus during the covered period, that all counts as compensation as well. We do want to encourage you all, don't do things that are not the right thing for your business just to get loan forgiveness. We really encourage you to do what's right for you. Don't go doing a bunch of crazy things at the last minute to try to get full loan forgiveness. All you need to do is just don't spend the remaining balance of that loan and then use it to pay back the loan, and you still won't have a loan balance at the end of all of this. You don't want to, put yourself out there and do things just because of your PPP loan if it's not in the best interest of your business. And that's really why we encourage you to go to your CPAs and your attorneys for guidance on all of this. Employer contributions for healthcare coverage, employer contributions for employee retirement plans, and payment of state and local taxes. It doesn't include the federal, the FICA, and all of that, but you can include state and local taxes that are assessed. Okay. It's really important. They still haven't given us great guidance on sole proprietors or self-employed. But it's really important that you know that it's got to be payroll costs. The draws get really messy, and they're expecting that they see a payroll cost that's equivalent to 8 weeks of earnings based on your 2019 Schedule C. We'll talk about that in a little bit as well. All right, non-payroll expenses. As I mentioned, there's very limited uses of these loan proceeds. Utilities, mortgage interest, which is an interesting topic in just a minute, and then your leases, your rent. For non-payroll expenses, it indicates that your mortgage interest payments are for the business itself, but it's on real or personal property, and it's got to be on debt incurred before February 15th. So that's interesting. Maybe it's because you've got a mortgage on a boat or something like that. They didn't have any clarification as to what they meant on that. That debt has to be in place prior to the pandemic, prior to February 15th. What's interesting about this too, and we cover this a lot in our FAQs, is it does also allow you to count these expenses if they're incurred but not yet paid at the time of forgiveness, at the time that you apply, provided they are expensed at the very next opportunity. So go refer to our FAQs for the specific guidance on that. The same thing comes into place with rent or lease payments. So if you haven't yet made your lease payment, but you're going to do it in the next couple of weeks, and you've accrued those expenses, you can go ahead and count that. They haven't given us a lot of good guidance on that, unless something changed in the interim final rule last night that I haven't had a chance to digest just yet. Utility payments. What was interesting about utility payments is it specifies that transportation costs are also covered. I wouldn't spend a lot of time worrying about all of this. Again, 60% of your loan is going to be payroll. And my guess is you got way more than that in these types of costs. So just use the ones that are going to be easy to defend. You don't have to report more on rent payments or utility payments than you need to get loan forgiveness. As I mentioned, they did clarify that for independent contractor or sole proprietor, you must have claimed these expenses again on your 2019 Form 1040 Schedule C. So make sure you have those Schedule Cs prepared. You should have given us a draft of your Schedule C as part of the loan application process. And remember, that's going to need to get filed or extended. If it does get extended, we're still not totally clear on what the SBA will accept on that. So probably safest bet is just to get those filed so that you can make sure you can get the forgiveness done. All right, here's the example I provided, and I'm hoping this helps those of you with questions about what covered period to use. So as I mentioned, the CARES Act came out with this covered period, this 8 weeks. So the way the interim final rule was written, it gives you these specific dates. I didn't come up with these on my own. What we did is we extended it out to how long, what's the worst case scenario that it could take for loan forgiveness. So let's say on day 1, April 20th, your loan is funded by the bank. Day 56, June 14th is the end of the covered period. It's actually day 55 if you're doing the math in your head, but that's because we count day 1. We count the day of loan funding. So the guidance is very clear. That's the end of your covered period. And again, there may be some circumstances, as we cover in our FAQs, where expenses that are accrued but not yet paid can still be counted during that covered period, as long as it's the very next payroll that comes up. On day 103, we're assuming that's likely when you're going to be doing your loan forgiveness application. The reason we're making that assumption is because your 1041s need to get filed for that second quarter. Again, you might be Johnny on the spot, and you may be getting that done really early in the month of July. So it's obviously up to you when you want to have a complete application for loan forgiveness. We're going to talk a little bit about how important that I'm sorry, did I say 1041? 941. We're going to talk in a little bit about how important that 941 actually is, because it's also what's used to verify your FTE count. So the reason this looks really long out there in the tooth is because day 163, September 29th, would be the last day that the lender has to make a forgiveness determination on your loan. The interim final rule did give banks up to 60 days to render a decision, knowing that there was going to be a crazy amount of volume. I can tell you that from our standpoint, if we take more than 2 to 3 weeks to act on your application, then we will throw as many bodies at it as we need to get that down. So our goal is to get you through this process as fast as you would like to get through. We've got a lot of great folks that have been on standby through this whole process. We've used people from HR, we've used our marketing department, we've used just about anybody we need to get these loans done for you, and we will do it again, I promise. So let's say though that you've got a friend in there with a large institution who has a ton of volume, and it does take them up to 30 days to get the application approved. In that case, the SBA has then come out and said, now we get as much as 90 days to render a decision on whether or not we're going to do a loan review on that application. So ultimately, it could be as late as December by the time you're seeing the forgiveness on that loan. Why does that matter to you? Well, again, it shouldn't matter to you too much, because we're going to try to get you through the process a lot quicker than 60 days. But you might remember that the SBA, as part of this program, also offered to defer your payments on the loan for 6 months. So we're going to try to get you done as soon as possible so that you continue to benefit from those payment deferrals before that 6-month period is ending. You may have also heard as part of the interim final rule what they did, I'm sorry, not the interim final rule, as part of the PPP extension Flexibility Act. They kept changing the name of it throughout the process. It's the Flexibility Act that was issued last Friday. They also extended the loan term for any balance that's not forgiven to 5 years for new applications. And that's for new applications. If you find at the end of all this that you can't get your loan forgiven, we can work with you and potentially extend that loan out to 5 years. But for right now, those of you that have applied and received your loans prior to June 5th are still under that 2-year period. So keep that in mind. Again, we want to make sure that you're not having to make payments, that you're approved within that deferred payment period, and that you have full forgiveness so you don't end up with loan balances at the end of all of this. That's our goal for you, and that's why we're here to help you through all this. The second scenario was contemplated by that May 22 interim final rule. And it said, hey, we understand that some of you have biweekly payroll. And if you're paying, every 2 weeks and you have your biweekly payroll, you can start your 8-week covered period on the date of your first payroll after that loan is funded. So in this example they give you, it's April 26th. And April 26th would be, in that case, the date of your first payroll. And then you take it out to June 20 for the end of your covered period. So you're now up to day 62 of your loan. Now, it really shouldn't matter from a loan forgiveness standpoint because, again, you're still going to want your 941s to be filed in order to apply for loan forgiveness. So in this scenario, it really doesn't extend you out a whole lot if you're opting for this alternate covered period. Again, we talk about this in detail on our FAQ page or on our FAQs that are on our PPP page. So do use that as a resource. And we just wanted to kind of give you an illustration here of how this might all work. The next scenario is the new 24-week period that's contemplated by the Flexibility Act. Same thing, right? Your loan is still funded on April 20th, but you're a business that's maybe in phase 3 and you can't reopen yet. You have not been able to use your loan on payroll expenses. So maybe you extend that out. Now, in this case, you're going to end up with October 4 being the end of your 24-week covered period. And that means that you can spend that 8 weeks of pay at any point during that 24-week period. But what it means, if you extend to 24 weeks, you're now going to have to wait until 12/31 to give your FTE count, we believe. Unless they clarified in last night's rule, it looks like they're going to have you count the FTE that's in effect as of as of December 31st. It may be that you can do it at the time you apply for forgiveness. And if you've reached your full FTE count and your full salaries by the time you apply for forgiveness after October, you're okay. But in this scenario, we're contemplating that the loan forgiveness application is submitted on December 31st because that is the headcount date that you're going to want to support with the SBA. That means that if you're with a large institution with a ton of volume, that it may take 60 days or up to March 1st in order to get that application approved. And again, looking at the SBA and their potential to take up to 90 days to select your loan for loan review, it could push you out to May. So hopefully that illustration gives a little better example of the way the covered period works. Again, it's at your option. As I mentioned, we're still waiting for clarity on if you choose 24, do you have to wait till 12/31, or can you do it at the time that you've achieved compliance? So watch for additional FAQs and blog posts on that particular topic. Okay, so nothing has really changed with the documents that are going to be required from the original forgiveness application. This is straight out of that 11 pages itself. They're going to want to see one of two things. They made it clear in the interim final rule on the 22nd that if you have third-party payroll service providers that are providing you reporting, that's really all we need. But if you do not have somebody like ADP or somebody that's providing those services for you, you can use a bank account statement, but it's going to be subject to additional documentation and requirements. So we don't yet know what that's going to look like. It might be that we have to do it based on each one of your individual circumstances, but the best way to assure that we've got good documentation is just give us your payroll providers records. We know a lot of these third parties are preparing PPP reports specifically to help you through this process. The other thing they're going to want to see is tax forms that overlap with that 8-week period. And as I mentioned, this is typically going to be your 941. They're also going to want to see your state quarterly wage and unemployment insurance tax filings. Again, they need a way to verify all of the requirements and caveats they've baked into all of this. They want to see what's happening, that you're paying your taxes, and all taxes are going to have to be paid before the SBA will act on this. Lastly, payment receipts, canceled checks, account statements. A lot of you opened up individual accounts that were specifically designated for PPP funds. In those cases, that's going to be really easy to look at canceled checks. So that's going to make life a lot easier for us. But again, you aren't required to have a separate account, and we'll work with you on these documents. What we'll do is when you're uploading the documentation to support all this, we'll give you guidance about what is covered by each requirement, and hopefully that will help you through the process. But as I mentioned, you'll be assigned to a specific officer at the bank. We've got some really great folks that are going to be right there on the phone or on the email to address those questions. Okay, so what do I use to document full-time employees? You keep hearing this FTE count. They're going to want to see the number of FTE that you had in effect in 3 cases. The first is, what FTE did you report at application? This is probably something you're going to want to take a look at. We saw some of you estimate, 50 or 20 or whatever it may be. You're going to want to be very clear how many people you had in your employ at the time you submitted the original loan application. The reason is they're also going to want to look at the FTE count you had in effect prior to the pandemic. Now, in our FAQs, we gave you guidance about the dates to use. You can either look back in time to February through June of last year, 2019, and document your average FTE during that time frame, because that is the time frame that they're going to compare it to this go round. Or if you've got seasonal employees, there's options for you there. Or if you're a newer business and weren't around at that point, you can use January, February of this year as your FTE count prior to the pandemic. Okay, again, that's all clarified in our FAQs online. Lastly, non-payroll expenses. Again, they're going to want to see canceled checks or lender account statements, just like with mortgage and your ATR rules and all the documentation when we go to refinance, right? They're going to want to see real statements, not screenshots, that include logoed account statements that it's been PDF'd from online banking. We can work with you to get those records, so make sure you check with us. Business rent and lease payments as well. Again, receipts, canceled checks, lease agreements, copies of the lease agreement. These are the kinds of things that you can anticipate being asked to provide as part of your forgiveness application. And then utility payments. It's pretty easy here. We're going to get a copy of your utility statement and your account statements during the 8-week period. And again, refer back to our FAQs because it gives you guidance on expenses that you've incurred but not yet paid because they haven't become due yet. Really important, it also clarifies that you can't prepay this stuff. You cannot prepay your mortgage interest in order to get it count for forgiveness. They made that clarification in the interim rules on May the 22nd. It's still not entirely clear what documentation is going to be required for sole props or partnerships that don't file 941s. It could be that it's just your Schedule C from 2019, and as long as we have that documentation, that we just estimate out how much those expenses would be over an 8-week period. That's how we think it's going to work, but again, we'll continue to watch for additional guidance. Okay, little quick preview of the online portal. Again, we have not released it yet. It's still under development. I'm sure that the programmers are madly developing. We're using a third-party provider that's just been a fantastic resource for us. And they are really on top. Every time the rules change, you probably saw it during the application process. They would issue a change to the application form. Maybe you had to re-sign it because things changed overnight. And that's because we've got somebody on the back end that's watching all these rules and then programming them so that it's really easy for you to understand. Otherwise, what you'd have to do is you'd go to that 11-page form, you'd try to fill out box 1, then you'd have to go forward in the application to read 2 pages of instructions about what to put in that field. So we've tried to take the guesswork out of it. You're gonna put here the frequency with which payroll is paid to employees. If you choose that biweekly, as we talked about, that's gonna allow you to use that alternate covered period. And then it asks you right here. You see the little question marks as well? If you have questions about something, there's going to be little helpful tips throughout the application here for you. So hopefully that will help. You will also have the option, you're going to establish a PIN with regard to your application. You will have the option to forward this link to somebody that might be assisting you with the process so that they can fill it out for you. So those of you that do have people assisting, that is definitely an option. I did want to clarify that the guidance, if any of you have used agents, there were no agents that we had agreements with during the application process to be able to collect that agent fee. And the guidance is really specific to the application process. So if somebody is helping you with the loan forgiveness, please know that there's no fee that they get to collect from the SBA to assist with that. So those of you that are on the call that maybe are helping clients, there's no fee for helping out with the forgiveness application. We hope that we're making it easy enough so that everybody can do it themselves. But again, they're definitely going to need all of you for your guidance and your support and your professional opinions, because some of this is really complicated. All right, FTE reductions. Again, this is based off of the old application. So you'll see the June 30 date here, but you'll see that step 1, it's looking at your FTE count right after the pandemic began. So February 15th to April 26th, you're gonna key in what your count is. Then you're gonna key in the FTE inclusive of February 15th. So again, that's the pre-pandemic level. You can see in this case, it dropped a little bit. So what that would mean is you would need to wait till June 30 to try to restore that. In this case, the FTE dropped even further as of June 30. So hopefully there's an exception, because maybe you offered jobs back to people, they did not come back. You see it says not satisfied there. We're gonna work with you to know if you do have an exemption, how you satisfy that. The reason it's not satisfied is because there's been no documents uploaded to support that step. So you see to the right, there's one document uploaded for each. You're gonna be able to prove out everything on your application by uploading those documents here electronically. Really important, because then if the SBA does come to us and ask for copies of your documentation, we have only 5 days to turn that around and respond to them. And if your bank doesn't respond quickly enough, it can impact your ability to get forgiveness. So we want to do this all in an automated fashion, make it really easy to get off to the SBA to get your forgiveness application in. Lastly, employment information. Do you have multiple owners? Do you have seasonal employees? The other question that they're going to ask is whether or not you have other businesses that have gotten PPPs in excess of $2 million in the aggregate. Those affiliate rules were really confusing to get through. So they've made it really easy. Hey, you know, if all of your businesses together have more than 2 million in PPP, please check yes. They'll be able to find out if you say no. So don't just be one of those people that just checks the box and doesn't think about what you're selecting. Because if it is over 2 million, it's likely they're going to have to verify some things. As I mentioned, our goal is to do this in an automated fashion so that it doesn't delay anything. So we're pretty confident that if you follow the process the way we're laying it out for you, that we'll be able to get you through. There's also a note about documents to evidence what's going on here. And again, we've clarified all of this on our FAQ page of our website. As I mentioned, the documentation has to be retained for 6 years. Now, even though they don't necessarily require all of this when we submit the application to the SBA, they've made it clear that they can come back to us and request this documentation at any time. They might also reach out to you directly. I'm sure that there's going to be some fraudsters out there that are trying to leverage that to pretend they're with the SBA and send us all your information. So please do be cautious and check with us if you do receive a question from the SBA. We can confirm it for you and make sure you're not being scammed. Schedule A worksheet table 1. Again, we don't have to send it to the SBA, but we do have it in an Excel version that you can upload to the portal. And by doing that, we'll always have that documentation ready if the SBA requests it. They also want to make sure that no employees in 2019 were that are included in the worksheet are paid an annual rate of more than $100,000. Again, it's not that you can't get credit for those employees as part of your payroll expense, but you can only get credit for up to the $100,000 annualized. It worked out to what, $15,385 per individual employee for 8 weeks of payroll expense. Okay, documentation regarding job offers and refusals, firings for cause, resignations. As I mentioned, this needs to be documented, so make sure you've got yourself covered here. And then lastly, documentation supporting your safe harbor. They've mentioned that might be the 941s. Again, I'm going to say this a second time, the note off to the right is really important. If you're going to say that an employee wouldn't come back to work and therefore you couldn't rehire to the same levels, you do need to report that to the unemployment office within 30 days of the person saying no. That's the only way you qualify for this exemption. The SBA has made it clear that they have not issued guidance on this just yet about how you're going to do that reporting, but that they will issue notices on their website on how that works. And again, we'll keep you apprised and we'll keep you informed as that changes. Schedule A worksheet, as I mentioned, if you download our worksheet and then fill out the data for each one of your individual employees and then upload it, it will pre-populate all the necessary fields. How do you calculate your average FTE? Again, this is covered on our FAQs, but I did want to clarify there were some ideas in the beginning of all this that it would be based on a 30-hour work week, but no. The SBA clarified that a full-time equivalent employee constitutes 40 hours worked. So the way they've done that is they've said, just add up all your hours, divide by 40 hours, and make sure that you've got enough FTE in order to qualify for forgiveness. They did give you an alternative if you're somebody that doesn't have that so easily at the ready, where you can say, if they're part-time, they're a 0.5 FTE, and if they're full-time, they're a 1 FTE. And that way, if you only track part versus full, but you don't necessarily know exactly how many hours each employee works, you do have that option. That might not be beneficial if you do have a lot of employees in 30 hours because you're only going to get credit for half that FTE. So it's just something to think about as you're going through that. One of the questions that I'm seeing is that we have an employee over 100,000. They're over 40 hours a week. You don't get to count anything more than 40 hours a week. So even if it's 50, you're still going to divide by 40 hours. And if you're using the alternative method, you're going to use 1 FTE for 40 plus regardless. And as far as prorating wages over the 100,000, what you're going to see is that person's just going to get capped. That person is going to get capped at $15,385. No one employee can ever get more than that. So that's how that will work. And I hope that helps to clarify. Let's see, let's keep going here. As I mentioned, one of the other things I wanted to cover was the new loan review guidelines that came out on the 22nd. And I covered this already, but again, I think it's a really important point. FAQ 46 that was issued by the SBA, they've been updating these regularly, said that PPP loans with an original principal amount of less than $2 million are going to be deemed to be in compliance and having necessarily made the certification that says, yes, I need this loan because of COVID. And they're going to deem you to be in good faith because businesses with loans less than $2 million don't likely have access to other funds, like the Lakers or any of those other folks that maybe got loans that didn't need them. All that kind of made people think that, oh, hey, that means if my loan's under 2 million, it's not going to get audited. Oh, great. That's not true. And the reason that I bring it up is you're going to want to have evidence to support everything in the application to protect yourself both now and later down the road. As I mentioned, there's a 6-month retention or a 6-year retention for these documents. This new rule came out and it said that the SBA may begin a review of any PPP loan of any size at any time in their discretion. We've heard loans as little as $40,000 being selected for review by the SBA because of other red flags in the application. Now, I'm going to clarify that's not us. We've only so far had one request for additional information, and it's a loan that's over $2 million. So that was to be expected. So far so good, knock on wood. But it's really important to know this because they said that they're not just going to look at forgiveness. They're going to look at you for your initial eligibility. Were you a qualified business? Were you a business that was eligible for the loan proceeds from the get-go? They could also look at your loan amount eligibility. Did you pick the right loan amount, or did you forget to exempt those employees over $100,000? Did you use the right loan amount? And then they also might look at your loan forgiveness eligibility. It's really important. They won't let us approve an application for forgiveness if we haven't done that work. And I know that we are running low on time. So what I'm gonna do is I'm gonna go through these questions real quickly. I think I've answered most of them. One of them, it's probably the most popular question: when are we gonna get our forgiveness link when we get assigned? You're gonna get your forgiveness link as soon as we're able to send those out. And it'll be based on those of you that have had loans for at least 8 weeks. So anybody in round 1 that's done potentially spending their money, we'll be sending out customized links to you in the next probably 10 days or so to get you started on that process. What does it mean not to exceed 15,000? Again, that's because what they did is they did the math. They took $100,000 annualized and they divided that by 8 weeks. So that's the maximum that you're going to get. It's confusing to some people because the loan application allowed you to apply for up to 2.5 times your payroll amount, but they're really only letting you have 2 times for payroll forgiveness. The reason is they gave you that buffer in order to give you the ability to spend the loan on other things like rent and utilities. So I hope that helps to clarify what's going on here. Let's see. There's a very specific question here about calculations. I'm not going to be able to address those on this call, but what we can try to do, if you want to email me after this, we're happy to take a look at individual questions, and if we can help you, we absolutely will. June 30 is still in place for retaining your employees. So if you've done that and you're all ready to go, get your application in now so that we can get you done and get you forgiven and get you on with your business. But you can elect to use 1231 if it's going to take you more time to restore your staff. Okay, let's see. The SBA changed the FTE from 30 hours a week. They didn't change it. So what they did is they never contemplated how to calculate FTE, unfortunately, in the original act or wherever it was. The IRS constitutes a full-time employee as 30 hours, so a lot of people assumed that it would be 30 hours. But yeah, you're gonna redo this. You're going to, as we talked about before, you're gonna divide by 40 hours, your total average hours, and you're gonna come up with an FTE count. Or you can use the alternative method that we talked about previously. Will you clarify the 8-week, 24-week? It doesn't have to be an 8-week period within 24 weeks. It's just that you're not going to get credit for more than 8 weeks of payroll. So let's say you go with 24 weeks, but you can't use it until the very end. That's fine. If you use it sporadically, like maybe you're paying monthly, that should be fine as well. What we'll do is we'll confirm that with the new interim final rule and we'll get that addressed. Rent, utilities deadline for use is period end if we opt for 24 weeks. That is a good question. I do not believe it's been contemplated by the interim rule, but no, the extension is for the use of the loan proceeds, and that would likely include rent, utilities, and all that. So if you're not yet paying rent again, then you can likely use that 24-week period to start paying your rent in order to get forgiveness. But that's a really great question, and we'll clarify that on our FAQs after we've gone through it. Do any loan amounts forgiven get treated as non-operating current year revenue to the corporation? Oh, that's a good question. And I have not been asked that before. I do not believe so. I do not believe it's counted as revenue, but it does create caveats. You're going to want to talk to your CPA about this. As it stands now, you cannot get deductions for anything that you claim for forgiveness. The ICBA and the ABA and several industry groups are trying to advocate for you on this, but so far that's the case. But I do not believe it constitutes revenue. I think there's just a lot of don't double dip. You know, don't use the FFCRA. If you're getting a retention credit for retaining your staff through your taxes, then that's not going to work for you here either. You're not allowed to double dip. But again, really check with your CPAs to make sure that you get the right guidance here. Okay. Are any exemptions provided for employee retirements that took place before the 8-week measurement period? Yeah, and I think we covered that. So if somebody does retire and they retired in March, for example, remember that the prior pandemic period is going to be February 15th prior. Going forward after that, you're going to count your FTE in effect from February 16th through April the 26th. So if someone does retire in that time frame, you're just going to want to maintain documentation that they've retired, and that's why the staff has been reduced. Okay. I think that's what we've got time for today. There's a lot of really specific questions. Oh, really good one. If you received a PPP loan and also an EIDL, will it affect loan forgiveness? That's a really good question. As far as we've read, the only time that we are required to withhold that EIDL money from your loan proceeds for forgiveness and remit back to the SBA is if you got an EIDL prior to this all starting. So it's pretty clear that prior to April 3rd, if you got an EIDL and got an advance, that we need to withhold the proceeds and remit those to the SBA. Oh, one other thing, lease payments for personal property. Would it include equipment leases and whatnot? We believe so. Again, they've not issued specific guidance. It kind of surprised people to see that it included personal as well as real property leases, but we believe so. Again, we're going to be watching for guidance on this, and we'll get clarification out to you as part of the process. Okay. And sole props. I think with sole props, again, we don't know. They haven't said what's going to be acceptable for sole props that don't have 941s. I believe the way it works is we're just going to use your 2019 Schedule C, and we're going to give you 8 weeks. We're going to divide that by a portion. For partners, they did the same thing. In the interim final rule, they gave you like a 0.92% of something in order to calculate the appropriate costs. They're not going to let you double dip though. And we'll put some additional guidance for sole props out there. We do have information for sole props and partners on the website on our FAQs, so go check those out too. And if you still have questions, make sure you send me an email. Will we be sending this presentation in a PowerPoint? Yes, we will send the presentation. We will also send you all a link to the webinar. We hope you found it valuable. And again, thank you all for attending. I wish I could interact with you. I'd like to say you've all been a great audience, but by the questions alone, I see that you're interested. So that's great. And feel free to contact us after. Thank you.